Ladies and gentlemen, good day and welcome to the 3Q FY22 earnings conference call of TECHNO Electric and Engineering Limited, hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kamlesh Kotak from Asian Market Securities. Thank you, and over to you, sir.
Thanks, Rutuja. Good afternoon, everyone. On behalf of Asian Markets, we welcome you all to the 3Q FY22 earnings conference call of TECHNO Electric and Engineering Company Limited. We have pleasure to invite Mr. P.P. Gupta, Managing Director, and Mr. Ankit Saroya, Director representing the company. I request Mr. P.P. Gupta ji to take us through an overview of the quarterly results, and then we shall begin the Q&A session. Over to you, Gupta ji. Thank you.
Thank you, Kamlesh. Very good afternoon to all of you and welcome to discuss our financial results for the quarter ending December 31st, 2021. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces and the challenges posed by the industry. Let me quickly highlight our performance firstly for the very quarter and then for 9 months period ending December 21. The total revenue for this quarter is at 3 billion plus. It is up by 22.5% year on year and around 11% quarter on quarter. The more significant part is the EPC side, where revenue is up to 3 billion and year on year is 46% and 32% quarter on quarter. The revenue from which segment stands at meager 6.92 crore only this quarter. This revenue is lower for 2 reasons. Firstly, the wind was poor in this third quarter, as we realized more wind in the second quarter this time compared to last year. And also we last year had obtained a favorable APTEL order giving us an entitlement of a tariff charge of 0.975 rupee per unit of the bill for the years 1920 and 2021. So that amount was about 36 crore, which is part of the comparative number of the previous year. EBITDA for the company stands at 42.6 crore for this quarter compared to 77.5 crore in the same period last year. But if we take away this one-time previous period income of 35 crore, it will be around 41.6 crore. So that the revenue realized is 42.6 crore compared to 41.6 crore last year. The operating profit for the EPC segment this quarter stands at 40.26 crore compared to 36.5 crore last year. We experienced EBITDA margin mainly due to high commodity price cycle, as all of you know, and higher overseas container freights. So it was a challenging decision whether we should execute more or defer the execution. But our call was to grow it up and whatever depreciation marginally we have experienced in EBITDA, all the L2 networks of these projects are under revision with the project authorities, and will be entitled for PV reimbursement down a quarter or two for all this part. So we have seen this 3 billion turnover almost after 7 to 8 quarters, and we are confident going forward that this will be maintained. The other income is again 120 crores compared to 11 crores. This includes income out of the sale of our shareholding in a company, in a JV company with Kalpataru for the Northeast project, and the gain is about 110 crores in this quarter. The profit before tax is at 151 crores compared to 75 crores last year, and it is up by around 100% because of this other income. The PAT for the quarter is at 116.78 crores compared to last year 64 crores, up by 82%. The EPS for this quarter is at 10.36. The 9 months we have seen a total revenue of 766 crores, up by 13.6% year on year, and the revenue from EPC is at around 700 crores, up by around 20% year on year. The revenue from wind segment is at 82 crores compared to 98 crores last year. It is mainly because of the one-time gain of 35 crores due to April. EBITDA for the company stands at around 220 crores versus 197 crores last year, up by 11%. This is after adjusting one-time revenue of wind segment last year. The operating profit for the EPC segment is at 113.56 crores compared to 111.5 crores last year. The operating margin is at 16.6% in the EPC segment. In the wind segment, it is at 85% approximately. The other income is at 147 crores compared to 75 crores year on year. Even last year also, the other income had included profit of about 50 crores by divesting the ownership in our Haryana project. Then profit before tax for 9 months is at 295 crores compared to 235 crores, and is up by 25%. And profit after tax is at 226 crores compared to 195 crores last year. The EPS is at 20.28. The current investment value, that is cash and cash equivalents, is at around 1,200 crores. That is almost 100 rupees per share. We have received various orders in this last 9 months, aggregating about 600 crores. We are placed L1 in 2 FGD orders worth 1,600 crores and 1 transmission asset of 765 kV for 250 crores. We hope to complete this these will be converted into orders in this month or fairly latest by March. The unexecuted order book as on date is about 1,600 crores with us. This will give us a visibility of order book of more than 3,500 crores as of today. If no other business is booked in the last quarter, then you may say it will be around 3,000 crore plus as committed in various conference calls. As committed indicated in last quarter, we will be recovering our performance of last year and shall be executing at least 50% of the unexecuted order backlog carried over the year during, and similarly for the year going forward. We expect large business out of FGD segment, AMI segment, and data centers. The above order book, unexecuted order book, does not include any business of data center as of now. In the coming years, basically, I will say we see a strong power sector reforms and with a focus on efficiency, reliability, and cost of power, and stresses on overall improvement in the financial health of the sector. The power sector will continue to focus on renewable power, related transmission infrastructure as green corridors. We see that the government has set a target of 500 gigawatt of renewable power by 2030, and similarly, I will also like to share that we are seeing now the business shifting from power to energy. That's a very significant change. You can also observe from the very budget announced now that government has given infrastructure status to two businesses, data centers and energy storage solutions, both of which we would like to be part of. And we understand well this segment. This was long awaited, one of the reforms achieved now. The FGD sector, coming to now, I am going segment-wise. First is the FGD segment. The FGD segment will continue to be in focus for next 5 years. As per notification of Government of India, all coal-fired thermal power plants need to limit their sulfur emission as notified by the Pollution Department by December 24 as of now. But there is a considerable progress with CPSU in ordering the projects for the implementation of FGD solutions. But now the same is being followed by SCBs and private sector thereafter. We are already L1 in around 16 billion business in this, in 2 tenders as communicated earlier, and this level of business will continue on yearly basis for next 3-4 years, as 80 gigawatt is yet to be ordered and fitted by the solutions by various SCPs and private sector. Coming to transmission segment, we expect that there will be status quo in transmission side. It will be limited to evacuation of renewable power, mainly through the green corridors. The TBCB bidding of 66 gigawatt out of 175 gigawatt is already tendered out. Tendering for the last lot of 60 gigawatt has started now. The 2 jobs which we booked last year, as discussed with you, for Seeker, Power Grid could not acquire the land, so that job has spilled over to this year, as well as we booked 1 job of Lucknow, for which the execution permission will be available after the election review. So both the jobs will be part of it, and additionally we have got an order from Sterlite for Assam project and Assam and Meghalaya project. We will also be now, we stand qualified of our own by virtue of EPC background under new QR rules of the grid coordinators, and we will also be selectively participating in this project of our own or in partnership with certain InvITs. The union budget further allocates 3 lakh crore in power distribution to be released over 5 years based on financial performance and viability demonstration by the DISCOMs. We believe this will be a very good high-end solution requirements by DISCOMs, and we will be a part of this segment. We are seeing good interest from the large investors, investment funds, to participate in this TBCB bids by making the company a significant partner. This will enhance our access to capital and will also help us in bidding for more projects. Distribution. On the distribution side, we see a lot of activity happening, particularly in the AMI segment. Our project is at the peak now in execution for J&K, where we have already supplied around 50,000 meters, and we intend completing all the supplies by June end and completing the project during the year. The main aim of the government in all this is to contain losses so that DISCOMs are able to achieve better efficiency and financial health. We had mentioned earlier that we may further be taking interest in 6 lakh meters of J&K, where we have a presence which is presently in tendering. Apart from this, there are readings in media that government is utilizing this opportunity also as reforming the sector while dealing with the COVID stimulus initiatives, which in the disguised name of Atmanirbhar Bharat, which is a long-standing demand. This is the amendment to the Electricity Act and amendment to the tariff policy and limiting the cross subsidy and payment the subsidy directly to the consumers is still to be implemented and made way of life in coming days. We are very hopeful that power sector is at its very critical juncture, and something good only has to happen going forward. In wind segment, as stated earlier, we have received our outstanding up to June 2020. We are also made eligible for delayed payment interest charges by Madras High Court and TNERC and April, and we should be getting paid for this money shortly. As regard the REC certificate trading in market has already started post CRC, post April order of November 21, and we have already realized about 25 crore in this quarter, and balance will be liquidated before March end. The COVID has impacted our life in multiple ways, but one positive outcome, as I shared last time, is the digital space. With the growth in digital data and backed by IT policy of data, localized data keeping, it is expected that third-party data centers industry will grow significantly. And in next 3 years, we see this happening from half a gigawatt to 2 gigawatt, and thereafter to 5 gigawatt in another 2-3 years. Till date, most of these centers were located in Mumbai, whereas now Chennai has become a preferred hub because of the undersea cable being available in Chennai too as Mumbai. And our data center is in advanced stage now, and it has progressed to the construction phase, which will be basically ultra-scalable, hyper-density data center meant for high-end applications, and it will be around 30 megawatt in load capability. Additionally, we will be able to consume our renewable power available in Chennai to classify the data center as carbon neutral and align with the major hyperscale customers like Google or Amazon, etc., because of their ESG commitments. The capex on this data center is about 1,200 crores, and we have spent by now about 50 crores on this. And investment alone in the electromechanical part will be around 60%, which is within in-house project capability, and we'll be able to leverage the same. Additionally, we are also closely looking on energy storage solutions in lieu of transmission systems, additionally required by renewable power, and improve the grid management to facilitate large-scale renewable power injection. With this, I trust I will invite questions and like to clarify more if any one of you want to know more about us.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sandeep Tulsiyan from JM Financial. Please go ahead.
Yeah, very good evening, sir, and congratulations on very healthy execution that you demonstrated in the quarter.
Thank you, Sandeep.
So I have a couple of questions. Yes, sir, please. Hello?
Yeah, I'm listening to you, Sandeep.
Okay. Yeah, so first question, sir, is on the revenue target. You had guided around 1,000 to 1,100 crore kind of EPC revenue target that you had given for the current financial year FY22. We have done close to 700 crores in the first 9 months period. So do you think in the last quarter, based on the current execution run rate, you can achieve this 300 to 400 crore kind of revenue? And also parallelly, if you would like to give any guidance, you briefly mentioned you will do 50% of your order book, means around 1,500 crore. So is that the number we should go by for FY23?
You see, there is always some time lag, but firstly coming to Q4, it will be 300 crore plus only. So 1,000 will be achieving now this year as committed. As EPC revenue. So now the minimum goal post is 3 billion a quarter. We will be doing definitely. And similarly, 3 billion will be further ramped up to 3.5 to 4 billion going forward. So for this year, like last year, we had done about 800 crores, and it is 1,000 crores this year plus. So growth is almost about 25%. So you can see at least a 25% growth next year also, without considering any output of the data center being booked in the company.
Okay.
If you book data center output, which will be no less than 300-400 crores, it will definitely be exceeding 1,500 crores in that sense. But 1,250 crores without data center will definitely be targeted.
Understood. And what would be the margin profile that we should, you mentioned, I know you have conservatively guided in the past that one should not look at the quarterly margins that you have delivered of 18 to 20%, and it should be in 15 to 16% on a sustainable basis. And there are some cost recoveries that you are hoping for that will come through. So from a margin perspective, how should we look at these numbers panning out based on the order backlog that you bid for on the FGD side, as well as on the data center side, what do you expect?
Around 15% we like to maintain as always committed. There may be opportunities sometimes to make little more, little less, depending on commodity cycles like we are experiencing now. It is almost after 7-8 years we are facing this challenge. But most of our contracts have a PV provision in the contract. But the challenge we faced was that due to COVID, the contract period have lapsed for some of the contracts ongoing with us. So the contract period extension and related L2 network need to be updated, which are in process with the main customer. And we are hopeful of achieving it in another 3 to 4 months. So that was I think, but you can safely take a goal post. Our guidance will continue to be 15% as a safe margin, operating margin in this business.
Understood. So second question is on the data center business. You mentioned you've done 50 crore kind of capex, and total capex is going to be around 1,200 crores that you are targeting. So how much of that you would incur in FY23 next year? And what is the progress on getting a JV partner? Because that will be very essential, because otherwise the capex in our books will be very high. And out of this 60%, which you mentioned will be the EPC order, should we consider 60% of the entire 1,200 crore, or that 60% should be of the plant and machinery portion only, which will be about 300-400 crores, if you can give clarity on that.
Yeah, 60% will relate to the 1,200 crores. That is the electromechanical segment with a backup power solutions, power receiving solutions, and even we will be experiencing around 25 megawatt hour of energy storage solution also in our scheme of things. So that will all be featuring as a part of it, number one. Number two, our target for next year first is to commission first phase of 8 megawatt. The partners, about 2 to 3 partners are being actively discussed, and we are hopeful to close with one of them in next 3 to 4 months. But after I'll ask Ankit to speak on data center after you approve with other issues to update you on that side. But another interesting feature which is emerging as the opportunity now is energy storage solutions. Like 30 megawatt wants to set a target, achieve it, in next 5 years, and also grant this. So this is also a very exciting opportunity like data center for TECHNO now, which will be first mover and should be better over transmission assets. And it will be supplementary to transmission assets. So this again throws up a very that will also be traveling, the power to energy now. Any company which wants to be performing and progressive in outlook, we must be part of the energy segment now in the country. And that is how the world is moving faster than us. And we all need to catch up with it, sir. So that is a very, very exciting phase. Never seen in my last 3 decades, which we will see in the next 1 decade. That so much has to be learned, implemented, and achieved again.
Understood. And last, a couple of clarifications. One is you mentioned there is a 25 crore wind REC revenue that you have booked, but in your total revenue for wind segment was 9 crore. So, where do we see that? Sorry, it was 7 crore. So where do we see that 25 crore amount that you booked? And the second is on, you mentioned there is a transmission boot project, TBCB project that you will bid for in partnership or either on your own. So what could be the tentative size of that? Those are the 2 final questions. Thank you.
Well, firstly, on REC certificate, we book the revenue on pro rata basis, quarter on quarter, as we are eligible for. 25 crore I mentioned, we realized cash by selling REC certificates, which were put under hold by virtue of the actual order earlier, and to set aside CRC order, and ground reality happened only November 21. So trading has commenced from November onwards. It happens once a month. And already about 5 million REC stands sold. The only inventory left to be sold is 3 million now. Whereas we anticipate demand is still another 8 to 10 million in this year. So it's a good opportunity to we'll be able to, we are holding now another 2 lakh certificates with us. So we'll be able to realize this 20 crore also by March. Maybe February or maybe rest in March. As well as the REC certificates are.
And on the transmission boot side, and what is this, the cash position that you mentioned at the beginning, was that the net cash you have, or there is some gross debt also on the books?
No, sir, it's a net cash in hand. We are debt free. So there is nothing minus. It's 100 rupee a share almost in the company now. And this cash will strengthen us to explore many new opportunities, like energy storage solutions, data centers. So new avenues are available to us in multiple ways. And additionally, I would like to add that this other income, company will continue to realize 100 crore plus every year going forward. We have that kind of potentiality and opportunity inbuilt within the system, which are not accounting for, but will be available to us to monetize those land banks or other assets, or even return from the deployed liquidity in the market, in secured liquid funds and bonds, etc. So all this put together is we are in a very healthy position to grow up the company, to be a part of the technology. I would truly like to say that we are not a EPC company like any other. We are purely a technology solution company and trust technological challenges in power sector. And we keep continue to attach that.
Got it. So sorry, on that transmission project, if you can give the size, what will be the tentative size?
But we'll be only taking part in small value, complex locations, stations which are strongly in substation segments. So it will be around 700 to 1,000 crores. We may succeed only in winning no more than 400, 500 crore business maybe. So it will only be to maintain our presence in the segment and also to generate some EPC business for us in time.
Understood. All right, sir. Wishing you all the best. Thank you for taking so many questions. Thank you.
Thank you. The next question is from the line of Dipesh Agarwal from UTI Asset Management. Please go ahead.
Yeah, good evening, sir. So my first question is, can you help us understand by when do you expect the EPC segment's margin to normalize?
Sir, I think our margins are more than normal already. It is a temporary phase of because, but overall this year also will be above 15% only. And going forward also, I can assure you. So there is no margin depreciation per se, except certain quarter-on-quarter accounting norms.
Okay. No, my question was, you have some commodity headwinds with you. So till when these headwinds would be with you?
No, I could not get you, sir. Can you repeat your question?
Right now, our margin on a quarterly basis in the EPC segment is lower than usual. So how long you expect that to be lower than your usual? That was my question, not for the full year purpose.
Sir, these are very relative terms, lower or higher. We trust we deserve to make 15% money having delivered a complex quality project in time. And this we will continue to achieve in near future also.
Sure, sure. My second question is to Ankit. Ankit, if we look at the progress on your data center, it seems like apart from land related capex, nothing has been spent till date. So can you help me understand why there is a delay in execution, as we have been talking about data center since a year plus?
Hello.
Yeah.
Yeah.
Yeah, I'd like to address this question.
Yes, I'll address the question. I will not say there is a delay, but one needs to keep in mind that we started this whole journey in the industry only a year back, and the design engineering work on the data center only started from the month of August onwards. Any design engineering of a new solution or a new industry can take time for any organization to absorb and move forward with, especially with Techno Electric, because what we are trying to do over here is something little different than what is being practiced in the industry till date. And therefore, it brings forward a substantial amount of learning and challenges on the table, but obviously makes the data center unique and makes it stand out in the industry. And therefore, it could have taken us 2 to 3 months additional to what it would have generally taken for an established player. But I will not say there's a delay. More or less, we are in line to start the execution on the ground on full swing probably in a month or two's time. And already substantial progress has been made towards the design work. And today, I can proudly say that the kind of design engineering which has gone into data center is significantly outstanding, because our biggest fear is getting addressed, which is most of the hyperscale customers today are directly approaching us and trying to understand what exactly is it that we are trying to do with this project. And that is a stamp of the kind of work that has gone into the center, though it has taken longer, but I think it is rewarding.
Understood. And lastly, can you share the cash balance and investment on books, and also the outstanding receivables on bill?
Sir, we already stated you that it is around 1,200 crores in cash and cash equivalents, that is 100 rupee a share. And debtors outstanding for us is about 550 crores in total.
550 is for wind, right?
Yeah. Including
Okay.
wind. Including wind.
And what is specifically for wind?
About 150 crores.
Okay. Thank you, and all the best.
Thank you. The next question is from the line of Kaushal Dedia from Axis Bank. Please go ahead.
Thank you for the opportunity. I actually missed the initial comment on the reduction in wind revenues this quarter. So I heard there was some 36 crores of one-off item. Could you please re-explain that, sir?
But we are in wind segment under a regime called APPC plus REC certification. This is one of the schemes of the Government of India as against single tariff policy, which is called FIT, or preferential tariff. So in this scheme, basically APPC is fixed year on year by any state government or state utility. Here the dispute was basically on the tariff stated by the state regulator, which was challenged in APTEL by IWPA along with us, and that was set aside. They had truncated the tariff to 2 rupee 14 paisa from earlier paid tariff of 3 rupee 12 paisa. So that 3 rupee 12 paisa was reinstated last year by the order applicable from the year 19 April itself. So that is how those 2-year tariffs revenues were booked last year for the power supplied.
Understood. So this one-off item was there in FY21, and it is even excluding this one-off item, there were some low winds in this quarter?
Yeah, compared to last year, because the Q2 was stronger this year than last year, but Q3 was little weaker than last year.
Okay.
But overall generation levels are better than last year, if you ask me on a totality basis. If you take data as of December end, then we have produced with about 200 million units by then. And as of today, we have already achieved about 218 million compared to 205 million last year. So it is around 5% more than last year.
Noted. Thank you so much. Thank you.
Thank you. The next question is from the line of Digan Bam from SVIP Capital. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a great set of numbers. Sir, I just missed out on something. You said something about the other income giving us 100 crores. So would that be every quarter or would that be annually?
Sir, I could not get you.
Sir, you were mentioning something about the other income being 100 crores. So I just wanted to know if that's quarterly or annually?
Annually.
Annually, all right. And sir, just one other question was that we'd made a loss of about 7.6 crores in the power segment, with revenues also being substantially lower. Is that how it's going to be going ahead, or will we be maintaining the 48 crore revenue quarterly?
Sir, I think we are in wind power only, number one. And wind power is a seasonal segment. First 2 quarters generally produce about 80-85% of the top line. And last 2 quarters are only 10-15%. It is historically like that, year on year for last 10 years. So it will continue to be same. By and large, you can take that wind gives us a top line of around 95 to 100 crores, and including the value of the REC certificates, and it will continue like that.
Right. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Rabindranath Nayak from Sunidhi Securities. Please go ahead.
Hello. Thank you for the opportunity, sir. Sir, what is the, if you take the one-off item, what would be the total revenue for the wind segment in this quarter? And how will you explain the loss of 7.61 crore in this quarter?
Sir, that is because you have to provide depreciation quarter on quarter and O&M charges. The cost outgo is generally around 14-15 crore in the wind segment. The revenue was 7 crore this year, so that is how the wind segment there is a deficit per se. But now wind segment is a division of Techno Electric, where results are produced along with EPC quarter on quarter. So last 2 quarters, wind segment has shown a surplus of almost 55 crore. So and the third and fourth quarter always shows a little minus, unless you have some kind of one-off like last year we had on this tariff revision. Otherwise, the third, fourth quarter in wind segment are always in a loss.
Okay.
As far as the bookkeeping.
If we include the one-off in this quarter, what would be the revenue for this quarter in wind segment?
In wind segment, it is around 7 crores, sir.
Okay, 7 crores. It is considering. Okay. And about the REC certificates, you mentioned that you have 2 lakh RECs pending. So this is still, yet to be traded, or it is you have booked the revenue for this? How?
No, as already explained, sir, the REC revenue, certificate revenue we take quarter on quarter as the entitlement happens. I only said we had cashed in this quarter for 25 crore. As the trading has started, resumed on power exchanges for REC certificate from November onwards. So we were holding around 4 lakh plus certificates, out of which we have sold out 2.5 lakhs for 25 crores.
Okay. So rest you will be selling in this financial year.
inventory will be liquidated in coming 2 months, this month and next month.
Okay. So what would be the contribution from this?
This will be 20 crores.
30 crores. Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Krantri Batani from Wealth Mill Securities. Please go ahead.
I just want to know about what is your plans, because plans with respect to data centers are concerned. Okay, there is a lot of emphasis is given in this budget, and also Indian data centers, there is a lot of focus. Can you just give what's your plans and how you are going to execute, and any timelines, and what is the incremental revenue that's going to contribute from the data center business?
Ankit, would you like to answer this question?
Yes, I'll take it. So basically, the TECHNO is putting up data centers, and the idea is to set up multiple data centers across India. We are basically setting up these data centers on 2 pillars of TECHNO. One is the capability of providing specialized electromechanical EPC services, and second is the understanding of setting up renewable energy across India and being able to provide power to these data centers, renewable energy power to these data centers, to ensure that they are carbon neutral and ultimately helps our customer meet their ESG compliance. And on the basis of these 2 strong pillars, TECHNO has aimed to develop about 200 to 250 megawatt of data centers across India over the next 6-7 years time. And to begin with, we have chosen Chennai as a first location for data center. And the reason for being in Chennai is because it is a growing market, not as saturated as Mumbai today. Though Mumbai and Chennai are the two most sought after markets for data center. Mumbai being number 1 as far as the installed capacity is concerned, and Chennai is catching up fast, and therefore the fastest growing market in India for data centers, and that's how we decided on Chennai. And secondly, we have our existing renewable energy assets commissioned in Tamil Nadu, which can be wheeled, the power from those assets can be wheeled up to our data center, and ensuring this is a carbon neutral data center. And the second asset we plan to bring up in Kolkata, and then we might plan to do something in Mumbai. That's the plan for the next 2 to 3 assets. And each of these assets would be in the range of anywhere between 25 to 30 megawatt of IT load. And as a facility load, one can say roughly about 36 to 42 megawatt.
Okay, thank you. Thanks for explaining in detail.
Yeah.
Thank you. The next question is from the line of Divakar Rana from Prudent Equity. Please go ahead.
Hello, good evening, sir.
Yeah.
So basically, I want to know that what are the EBITDA margin in these FGD orders?
You can take it around 15% plus.
15% plus, okay. And the upcoming orders that you have bid on?
That
the same margin?
Similar, sir. Same, more or less same.
Okay, yeah. The next question is basically, in the recent budget, the government has increased the, basic custom duty on smart meters from 15% to 25%. So basically, will this impact our current smart meter order book?
No. You see, rather, on electronic items, you must have read in the book, cost is likely to go down overall. But we are using all the meters made in India by companies like Schneider, or Landis+Gyr, or Genus, and many more will happen in India under IPL scheme. So we don't see any threat of this kind of issues. And if chip making starts in India, the prices are further going to see correction. And And even government wants cheaper smart meters, not costlier, as a solution.
Yeah. Okay. Thank you, sir. So the last question is basically, have we received all the money after selling this Kohima JV? Is there any money pending?
No, zero. We received 100%, sir.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Nitin Gandhi from Chris Trade Capital. Please go ahead.
Thanks for taking my question. My question is continuation of data center. Can you elaborate something more on how much investment will be going under each of these three centers which you are planning? When will they start flowing revenue? Are they getting implemented in phases? And what are the normal margins expectations for each of them? Maybe it's a 3 to 5 year call or little beyond, but if you can take some more business plan, what you have, if you can share, it will be helpful.
Yeah, Ankit, would you like to take?
I'll take this up. So basically, we are planning centers, as I mentioned earlier, in Chennai, Calcutta, and then we are exploring a third location, but most likely shortlisting it to Mumbai. And as I mentioned, each of these centers would be approximately 25 to 30 megawatt of IT load, and capex can be assumed at about 45 crores per megawatt of the IT load. So on an average, one can say anywhere between 1,200 crores on an average of capex per center. And this kind of capex is planned over 4 years for each of the centers, because each of the center might come in 4 phases, and each phase being commissioned subsequent to the commissioning of the past phase, and each phase may come every year. So let's say, for instance, Chennai data center is commissioned by June 2023. That would be the first phase commissioning, and the second phase by June 24, third by June 25, fourth by June 26. And each of these phases, obviously the first phase is heavier in capex because you are basically deploying the civil structure work of the complete data center up front, and the electromechanical work is what is phased out. So one can look at about 250 crores of electromechanical work for each of the phases, and the additional cost of about 120 crore upfront in the phase 1 towards the civil structure work. Similarly would be the case for the data center in Kolkata and then going forward in Bombay. And those centers may start hopefully in a year. From now we can think of beginning the Calcutta project, obviously depending upon the progress in Chennai and subject to customer interest. But hopefully by end of the year or beginning next year, we can think of starting the work in Calcutta, and maybe a year from there for Mumbai.
Something on revenue, expectations and margins, maybe phase-wise?
At its peak occupancy, one can expect a revenue of approximately 400 crores with a margin of anywhere between 70-75%. It is subject to the customer mix that we are able to achieve finally, but expecting a margin of 70 to 75% at 400 to 500 crore of revenue.
And we expect peak occupancy to be achieved in 3 years?
Yes, you can say each phase will be deployed only once we have a signed customer behind, and the previous phase is completely occupied.
Right. Thank you, and all the best for the time.
Thank you.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Thank you for providing me this opportunity. Sir, in EPC segment, we did a peak revenue of 1,200 crore way back in 2017. And so this year, we are likely to close this revenue at less than 1,100 crore. So after we consider inflation, then there's a fall is even more dramatic. So moving forward, sir, how do you foresee that the company can scale up this EPC business?
I think the worst is behind us, number one. And number two, with the growing order book position of 30 billion plus, first time in last 3 years, was obviously top line is likely to grow. Next year, we are targeting no less than 20 crores out of this order backlog. And some revenue will happen out of data center also. So we definitely see that growth is back, as budget is also very promising on private investment and capex. So we are hopeful whatever we have could not achieve rather in last 3-4 years will be achieved in next 3-4 years, including the loss of last 3-4 years. So you can expect that in another 3 years, Techno will achieve a top line of 1,752,000 crores. That is how it has always gone in steps, not as progressively year on year because of the government programs or upsets. But nevertheless, in last 3 years also, even if our top line has not grown, matching with the other things, we have not allowed our bottom line to erode either. We have successfully retained the bottom line, cash flows, and also the financial health of the company. And the company is debt-free now. And we have a lot of cash in books to see further growth by not only existing EPC area, but in future areas. But I have one thing to add here, sir, that this company need to be looked not purely as a EPC in T&D. It needs to be looked as a technological solution provider in the power sector and be rated accordingly, I will say. Like we are migrating now from power to energy. We will be part of data centers, we will be part of battery storage and renewable power and whatnot. So we'll keep moving the technology, knowledge, power curve along with the opportunities. So as we have always maintained, sir, that we don't want to be the largest in any segment, but we will always aim to be the best in a segment we are in.
Sure, sir. Sir, and also, sir, since our balance sheet is so strong, I think maybe the strongest in the whole industry. So in that case, sir, if you could do regular share buyback, sir, then what will happen? Our EPS will grow faster than our revenue and profits. So that will be a great boon for shareholders, and also, so that is the most tax efficient. I understand, sir, that you mentioned this in last quarter, Concall also, that maybe you are thinking about it. So any clarity on a share buyback?
You see, firstly, share buyback is not our forte, sir. We leave it to you people to encourage us, but definitely we'll be liberal in dividends, as well as we may contemplate buyback also, post markets getting a bit of a stability and not volatility like now. So I think we have just come out of the bad past or stagnating past, and future is going to be improving every day. We will be targeting EPS of no less than 50 rupees in next 3 to 4 years from here onwards, with this year ending at no less than 25 rupees.
Okay, sir. So thank you very much and best of luck to you.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Anand Rathi. Please go ahead. Rahul Jain, please go ahead with your question. Your line is unmuted.
Hi, sir. Thank you for the opportunity. Hello. Am I audible?
Yes.
Yeah, we can hear you, sir.
Yes, sir. So wanted to clarify on the order inflow and order book numbers. So, sir, what was the order inflow in Q3 as well as in 9 months?
In 9 months is 600 crore by now, and only for Q3, I think worked out separately. You can take Q3 is at least about 250 crores out of the 600 crores. 2 jobs I remember, one from Power Grid and one from Starlight. We have taken, and totally 600 crore in last 9 months. But now we are L1 in about 18 billion. 2 FGD orders and 1 765 kV transmission asset. And these orders should happen by end of this month or early next month. So we should be closing our book with the order backlog of no less than 30 billion. First time after 3 years. And we will keep building in future.
Okay. Sir, what is the current order backlog you mentioned?
Order backlog is 1,600 crores, sir, as of today.
Okay. And what is the guidance for the next year order inflow?
We should look on a order inflow of at least about 2.5 billion.
2.5 billion. Okay. So this would be coming from...
Not 25.
Sorry, sir?
25 billion.
Yeah. So, sir, this would be coming from which sectors?
Yeah, mainly FGD and transmission, as well as distribution, data centers, all put together.
Okay, so all the centers are focused. Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Rajkumar V, an individual investor. Please go ahead.
Yeah, good evening. Can you hear me?
Yeah, we can hear you, sir.
Yeah, thanks for the opportunity and congrats for the good set of results. Sir, just 2 questions. First one on the wind segment, for the March 21 quarter, you had shown a negative bottom line of 22 crores. Just wanted to know whether we can expect a similar number for the current March 22 quarter, or the bottom line negative will be similar to the current December quarter.
You see, I already have explained in previous questions that wind is a seasonal business. First 2 quarters are always strong over last 2 quarters because wind season is linked to monsoon season largely. So sometime it lasts up to October end, and sometime it is over in September itself. That is how we have seen the cycles. So in first 2 quarters, we realized about 85% of the top line in wind. And last 2 quarters gives us only 15%. So this practice, it's an industry-wide trend. And same is experienced by our assets also. And same will continue going forward also.
Okay. No, sir, the reason why I'm asking is the last year, March quarter, you had shown a significant loss. So that's why I wanted to check whether we can work on the current December number as a run rate, or we should take an, addition.
And the wind segment should always be looked on an annual basis. Not monthly basis.
Okay, got it, sir. And sir, the second question is, given your good cash position, just wanted to know, are we not looking at doing any buyback given the subdued prices?
Pardon? Given the cash position, what do you want to know?
Yeah, I want to know, is the company looking at doing a buyback of shares?
Yeah, we were looking. We thought that in this budget, the tax on buyback will be taken care by the government. So we have engaged advisors to us. If we don't go for buyback, we'll definitely come out with liberal new tax. But some buyback will happen in near future.
Okay. Thank you, sir. All the very best.
Thank you. The next question is from the line of Dipesh Agarwal from UTI Asset Management. Please go ahead.
Yeah, thanks for the opportunity again. Just a bookkeeping question. You mentioned order book is at 1,800 crores and the inflows were 250 crores in the quarter. But if I look at the order book at the end of September 21, that was 2,000 crores. So can you help us reconcile? Is there some cancellation of order?
There is no cancellation, sir. We have only filtered something. Residual is always left out in a project 10-20 crore, which is not to be executed. And like this, we have definitely taken off the books about 60-70 crores from the books. Earlier, we had stated about 1,750 crores and 250 crore as a L1. That's how we were expressing. Now that 250 crore has become an order book, and L1 has emerged for another 18 billion rupees. So that is how it goes dynamically, quarter on quarter.
Understood. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Kamlesh Kotak for closing comments.
Yeah. Before that, Gupta ji, just 2 points I want to understand. How much is the L1? Can you just quantify the value of 2 FGD and 1 765 kV order, sir?
It is, you can take 14.5 billion for FGD and 2.5 billion for transmission.
Okay. And sir, about the current 1,800 crore order book, can you just help us with the breakup? How much is FGD, distribution, substation, and transmission?
Yes, I know. The present order book, we are doing one FGD project now at Bokaro for DVC.
Mm-hmm.
So you can take FGD unexecuted part today is around 1.7 billion.
Okay.
Which is in execution.
Okay.
And rest of the projects are transmission and distribution in 1,600 crores.
1,600 total, right?
Yeah. Out of which 170 if you take out,
okay,
1430 crore is a transmission distribution.
Okay. And these are all India orders, right? No export orders part of it.
No, there is one export, sir, Africa, Togo. That is
how much is that?
This is 10 billion, $10 million US.
Okay.
75.
Okay. Fine. Great, sir. That's very useful. Okay. So we conclude the call, sir. Any closing remarks you would like to give?
Yeah, I would definitely like to appeal to my investment community that we should not be looked on as a EPC in a commodity sector. We are knowledge-based and technology-based company providing high-end complex solutions in the industry and have been dynamic between generation, distribution, transmission as the opportunities. We never aim to be the largest. We aim to be the best. That is our 40 years of presence in this market of power. And we cater both to power as well as power guzzling industries. Secondly, now the power itself is getting modified to energy sector. That's what the exciting journey is for us, from power to energy. So we'll be looking on a lot more technologies like energy storage, data centers, carbon neutral, climate change will be a part of us. We will be ESG compliant also, which we have been for the last 10 years, but now we document it also for the purpose of our investors. So we are very different background companies than many others, ESG compliant, green power, and we were the first mover in, let me share a journey of TECHNO, sir. We were the first mover in transmission PPP projects. We were the first mover in IPP in renewable energy. We are I would say as a power sector company, we are first mover in data center also, unlike telecoms who have been in presence till date. And now we are eyeing energy storage also as a challenging sector, and we'll keep looking on more opportunities in energy space going forward. And we'll be ESG compliant also, additionally. So our investors need to look on us differently. That's what I like to appeal.
Sure, sir. So thank you, Gupta ji, for that insightful thoughts and outlook that you shared with us. With that, we conclude the call. Thanks everyone for joining for the call. Have a good day ahead. Thank you.
Yeah, I have a closing remark to make. I'd like to thank all of you, sir, for joining the conference call. In case you still have any query related to our performance, please drop in a mail and it will be promptly attended. And I also welcome you to, if you are happen to be this part of India, to visit our office and see how we handle our business and deliver. With this, I will once again like to say thank you very much for joining the call. And Kamlesh may close the conference now.
Thank you very much, sir. With that, we conclude the call. Thanks, and you may disconnect now.
Thank you.
Thank you. On behalf of Asian Market Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.